Welcome back, guys. Since the last video I broke the 100% profit mark, meaning that since I started this portfolio 1 year ago, the money that I put in there from my revenue and what I managed to save by living below my means now doubled. That's a huge motivation for me. Please remember to like and subscribe. I'm trying to provide all the information I have to make my investment decisions and share them here with you. Well, what should I say about my allocation? My portfolio changed dramatically since the last video. My Bitcoin position grew from 16% of my holdings to over 35%, and I'm not planning to sell. If anything, I will keep buying Bitcoin, however, much lower amounts than a couple of months ago because of a simple question I asked myself. What is the best asset where I can put my money to work right now? And the upside for Bitcoin is still immense compared to the upside that stocks offer, in my opinion. Every bull run had its 40% pullbacks where I will gladly increase my order size again, which I did here, for example, after it suddenly slipped 17%. It wouldn't make any sense for me to sell some of my position because I think Bitcoin is here to stay, and for now only around 1% of the world population are invested in this cryptocurrency, and the price tends to follow usage. I would start selling some as the price moves further away from the 200-day moving average, or if it reaches far beyond 50 to 70% of my net worth, but only to be able to buy back more when it crashes, which I think is inevitable, with greed-driven FOMO resulting in panic-driven sell-offs, only to start all over again until the adoption moves further along this curve. I elaborated in detail my rationale behind this in a video linked up there. And to give you an idea, with lower amount, I mean when I used to buy $1,000 worth of Bitcoin, I now buy only $250. My second biggest investment, namely Tesla, increased by 120% since my last video. I've heard many times that there are always only a couple of holdings that drive the majority of the profit in a portfolio, and in my case this is definitely Bitcoin and Tesla. Warren Buffett is famously quoted saying, "Diversification is protection against ignorance. It makes little sense if you know what you're doing." I don't know what I'm doing, that's why I'm not all in BTC and Tesla. I had high conviction with these two and kept buying. I acknowledge that Tesla is currently trading at 30x sales, not earnings, sales. For reference, Amazon is at 4 times sales and Facebook is at 3, both showing very strong growth. I would never bet against Tesla. This has been a very poor choice for all of the so-called experts. I'm still following my strategy of keeping this position at around 20% of my portfolio, thus forcing me to sell a share from time to time. Even though I'm definitely invested for the long term, I believe it's a rational decision to take some money off the table from time to time when investments perform that well, which I feel we risk of getting used to in times like these. I think it's impossible to tell whether Tesla is going to fulfill this valuation, but what I believe is that a lot depends on innovations that can take longer than expected. Tesla has to be a tech or robotics company to ever be worth that much, low margins for car manufacturers being the reason for that. To get an idea what has happened historically when a company reached sky-high valuations, I looked at Amazon during the dot-com bubble. Similar disruption, maybe comparable hype, but much higher margin as a software company. 90% correction from these highs. Of course, in the grand scheme of things, that's nothing, but that's over a 20-year period, and my plan is to buy Tesla whenever it goes down considerably. What do you think? If you bother looking at valuations, is it really worth nothing or even bad for your return on investment to sell from time to time? On a valuation basis, Financial Education ran the numbers, concluding that the current valuation is acceptable because on a forward PE basis, Tesla would be valued at 80 when they achieve making 10 billion in net income. ARK Invest, who are the hottest player in the ETF space right now, have an expected price of 7K for this stock on a split adjusted basis, which is still an almost 175% increase from here until 2024. And a lot of money is flowing in that ETF, meaning a lot of money is flowing into Tesla, and same for the S&P 500 ETFs. So enough of Tesla. Some stocks I've been dollar cost averaging into are Beyond Meat because I wanted some exposure to the plant-based food space that has to grow huge in the next 10 years. Also some Dropbox because it is so undervalued. It has a PE of 116 but a forward PE of only 20. for 2021. I also increased my position in Alibaba because it dropped huge and is so cheap compared to Amazon with a PE of 30 compared to Amazon's 90. And they actually have better numbers. But of course, this comes at a higher risk due to China's totalitarian regime and antitrust allegations. But that's true for Amazon as well. I'll be honest, I cannot judge how big this China risk is, but you can't get a high reward without it. The business is extremely strong, so I will take that risk. Tencent dropped a lot as well, part of the Chinese stock sell-off beginning of January, and I also bought some more shares here. I also increased my usual positions in Facebook, Microsoft, Etsy, and I bought a tiny bit of CD Projekt Red because they dropped huge after the release of their new game Cyberpunk, and I wanted to get into gaming a bit, and they seem to be loved by the community and grow very strongly. I also bought more Square because they are such a diversified fintech and small business play in terms of their growth as a business platform and as a reopening and stimulus trade, but also as a Bitcoin trade. What this chart shows us is a comparison of website traffic between different URLs, and the Square sign-up page seems to grow in terms of traffic, whereas the Shopify.com and My Shopify page, which is where we log into our online store, seems to decline. This is why I bought my Square position up to my Shopify position, and over time I will make it bigger. Disney is another stock I really like, but I have enough at the moment, and I also think a lot of what their streaming service is going to bring to their growth has been priced in. But if you don't have a position in Disney yet, I think you should consider it. It's at 1.5% of my investments currently. I remember when in spring Scott Galloway said in the Pivot podcast, I want to see Disney building out their business around recurring revenue driver Disney Plus, which was hands down the most successful streaming service entry ever. Still, they postpone movies like Black Widow because they can't show them in theaters when they should release them on Disney Plus. But this is exactly what they seem to be doing now. So that's it. I hope you got some value out of this. Please consider subscribing to my channel as it really helps a lot. Thank you very much for watching. See you next time.